Hi guys, this is Crowd Investing. In today's stock analysis, I will go through this company. It's called LOWE'S. LOWE'S is one of the biggest house improvement company in USA and Canada. Their main competitor is Home Depot. 2 weeks ago, we have done a videos about the Home Depot. If you have not yet watched that video, please go and watch first, then continue with these videos. Okay, the reason that I choose this stock is because this stock is actually in a very nice uptrend since 2011. Before 2011, right, you can see the stock is like growing very slow or like moving sideways. Then I noticed that actually this stock and the Home Depot is actually benefit from the COVID-19 pandemic, because you can see here is the price going down due to the market crash, and then but after that this stock is actually going very fast due to more and more people working from home. They buy the furniture and then they do their some renovation in their house, and then there is the reason that this stock is actually going very fast after the pandemic. And then I will say that this is very good for the people, because people realize that their job is actually no need to go to the office. They can also work from home. Disclaimer. Okay, business overview first. This stock is actually the Fortune 50 home improvement company. Then they are actually serving 220 million customers a week. This is a huge customer. And then in United States and Canada. So this is the weakness of this company, because their main business is only in United States and Canada. They should be more diversified, and this is also one of the potential that they can have for the future. And then the company's services and products include the constructions, maintenance, repair or remodeling your house. And then Lowe's is the second largest global home improvement retailer, just behind the Home Depot. And then their business is actually 93% in USA, and the other 6.9% outside the USA. And then their business segment, right, they mainly have 3 business segments only. It's harness, building products, and home decors. So it's also quite diversified, and then the revenue is also quite nice. Okay, so this is a categories between the Lowe's and the Home Depot. From upper part is a Lowe's, and then lower part is a Home Depot. You can see that Home Depot actually have more different services and the products compared to Lowe's, but I will say that Lowe's is actually very diversified also, and then you can get everything that you want in Lowe's and also in Home Depot. Okay, the revenue, you can see that the Lowe's revenue is actually improving year on year, and then this 2021 is actually a revenue of 2020. Then you can see there is a big jump. It's due to the people buying more and more furniture for their working from home. Okay, then there is a net income. If you notice that the net income in 2019 is actually low, really low, because of this company is paying one of the long-term debt in 2019. So that is why they use a cash to pay the debt. So that is why their net income is reducing. But if you don't count the debt, then they are actually growing consistently. Their net income is really nice. Then the cash from operations, there is a dip in 2020. So this is because the Lowe's is actually changed in working capital, means that they have spent more money in their working capital. That's why it's become a bit lower, but yeah, we say that it's still consistent. Then this 2021 high jump is because of COVID pandemic. People buy more furniture, work from home. Okay, then the debt review. The current ratio is 1.17, okay, pass. Debt to EBITDA is 2.41, okay. Debt servicing ratio 7.89, fantastic. Interest coverage ratio 12.59 is also very good. Debt to EBITDA is not so nice and not look good, because there is a 62, means that this company Lowe's, they are actually have a lot of the debt. But you can see that from those the difference ratio that we see previously just now, there are actually no issue in covering all their debt, means that they can pay all the interest. So that I will say that the debt is not a big issue, then their debt is still considered very healthy. Okay, so for those future growth rate in the different financial website, the average of the future is about 14.38. and then the average of the past 5 is about 20.12. So I would say that it's quite fair. And then if you say 14% in future growth is also quite conservative. Okay, the intrinsic value, based on the intrinsic value calculator that I have, the fair value is about $235, and then the current price is about 191. So it means the compare the fair value to the current price, and then is about 18.5% lower. So it means that Lowe's is actually undervalued right now. Then if you watch our videos in Home Depot is actually at the fair value. So for the diversification purpose, I will buy Lowe's and Home Depot at the same time, but I will buy more in Lowe's and then buy less in Home Depot, because Home Depot is only at the fair value. Lowe's is at the undervalued price, so I will buy more of the Lowe's. Okay, so I have a comparison between the Lowe's and the Home Depot in the last 5 years. You can see that previously the Home Depot is also always above the Lowe's, but actually both companies is actually moving quite similar, and then after that they are actually moving together right now. So and then the percentage in the last 5 years is also quite similar. So I would say that no matter you buy Lowe's or Home Depot, actually it's the same, but I will prefer Lowe's now because of the undervalue. So these are the few areas that I think is good to buy. Personally, I already bought first around here, around 186.75. I already bought. If the price go down to here, previous support turn to resistance, then I will buy my second batch. If the price continue to go down, then I will be more happy, because this is a very strong support level, bounce 3 times before, then I will buy more. If the price continue to go down here, because this one is actually 100 moving averages, it bounces 3 times before, 1, 2, 3, then I will buy my last position here. So example, if I have $1,000, then I will allocate 250 here, 250 here, and then 250 here, and the last 250 here, so to have the full allocation of this stock. Okay, so this is all for the today's stock analysis of Lowe's. If you like our video, you can subscribe and like. Thank you very much. Have a nice day.